afternoon. Welcome. You're watching the Business Today show. I'm Sakshi Batra. First up, the top news we're tracking for you tonight. Exclusive reports from France and Italy as India reboots its trade ties with France and Italy. Business Today Television's Karishma Sudani brings you the latest ground report as Piyush Goyal engages with Rome in the second leg of his Euro trip. TCS kicks off the results season, misses street estimates with a 5% quarterly rise in the net profits, revenue up 2% over the last quarter, declares a final dividend of 24 rupees per share. Indian equity indices extend gains for the 8th straight session on positive global and domestic cues. Investors eye inflation data from the US and India. Pharma and healthcare indices top the gains, while PSU banks, media and FMCG indices settle lower. Consumer price inflation moderates significantly to 5.66% in the month of March. Big fall in food price rise. Vegetables are cheaper, while cereals and milk products are still costlier. Markets regulator SEBI sports a new look on its 35th Foundation Day, unveils a new logo, says it reflects the aspirations of a new and modern nation. India loses a doyen of the industry. Keshav Mahindra passes away at the age of 99. Death of the former Mahindra chairman is condoled by business leaders from Ratan Tata to Deepak Parekh. Straight on to the first story we're tracking for you. Commerce and Industry Minister Piyush Goyal has moved to Rome for the second leg of his 3-day European tour. He had a number of power-packed meetings in Paris on Tuesday. Business Today Television's Karishma Sudani is part of the delegation and also spoke to the minister on the key takeaways from his Paris engagements. Here's an excerpt from the exclusive conversation.
Television, we are joining with the man of the moment, Union Minister of Commerce and Industry, Mr. Piyush Goyal. Sir, we are here at the India-France Business Summit, followed by which you also have another key bilateral meeting happening in Rome, Italy. How do you see this collaboration panning out as an opportunity for India?
Well, I think very clearly European countries are recognizing that India is right. The last decade has been one where we have reformed in significant measure, and as Prime Minister Modi says, we have reformed with conviction, not out of compulsion. And this reform has now started to show in terms of the interest that companies and countries have in India. They recognize that today, India with a young population, with high aspirations, probably provides the biggest market opportunity that is available anywhere in the world. They recognize that a country where the basic needs of everybody have been well taken care of is a country where there will be demand for so many new goods and services which present a big opportunity. At the same time, with India's high managerial talent, skilled manpower, affordable costs, and scale of operation that we can offer, India becomes a very competitive manufacturing or service provider. In that sense, people are looking up to India to invest greater degree of capital. They are looking to set up bases in India, both for design, for innovation, for manufacturing on the one end, and for provision of services to their international operations. So each one of the companies, and I've had so many bilaterals through the length of the day. I've had a business summit which in the course of the day we had very good attendance, nearly 300-400 companies attended and engaged with Indian companies and have expressed interest in expanding business and trade with India. We've had a CEO roundtable with about 40 top companies. All of this gives me the confidence that France certainly is a country to watch out for in terms of our ability to scale up. I'm confident about Italy also, given the level of interest that has been shown to the impending visit to Rome.
Right. So due to the current geopolitical situation, there has been some kind of fear, I'd say, on the global demand, especially if you see the FDI has been also on a decline. Do you see this as a challenge persistently?
Well, I think all over the world there's been a softening of investments and trade. Fortunately, given the huge strengths that India had, we've been able to maintain the momentum in trade for the last 2 years. We've seen our exports grow from about $500 billion to nearly $765 billion in a short span of 2 years, with growth being secular both in goods and in services. We hope to continue on this track in the months and years to come. On FDI, we certainly saw a huge amount of foreign direct investment growth in the startup ecosystem in the last 2 years, prior to the years that's gone by. Last year, because of the overheated condition and valuations in some sectors, we did see some softening of FDI, but I think it's a temporary phenomenon. India presents such a compulsive investment opportunity that I am quite confident growth will come back.
Business Today TV special correspondent Karishma Sudani also spoke to Sanjeev Puri, Chairman ITC and also office bearer of the CII. In an exclusive conversation, Puri gave details of the trade talks and the possible outcomes right there.
We're joined by Mr. Sanjeev Puri, Chairman ITC, and also, of course, important key member representing the CII here. Sir, first things first, congratulations to you. A majority move that's taken by the commerce industry, along with, of course, the Ministry of Commerce in leading this. How do you see this panning out in the coming days?
I think the presence of a galaxy of business leaders on either side is testimony to the potential and the interest that this visit has generated. I think that the understanding of the opportunities in India, the fact that India is transforming, I think all that through the visit has certainly been strengthened and enhanced. And there is, of course, recognition that there is opportunity to build on the strong relationships that India and France have got, which is, that's really come by the impetus that the government has provided, and it's a relationship that is built on a very strong foundation of trust, because it's also related to some critical sectors like defense and cyber security, amongst others. So there is certainly now greater opportunity for business to business, increased collaboration across multiple sectors like the green economy, the startup, the investments in manufacturing, given the PLI schemes, given the lower corporate income tax, in infrastructure, given the investment on Gati Shakti.
Right.
So there are tremendous opportunity. We can work together on food and nutrition security, a global problem, like the opportunity to work on healthcare, really to collaborate and make the world and make our countries better and solve some of the issues that are facing the world. In fact, even in the context of the new geopolitical dynamic, I think this relationship holds immense potential.
Great. You did talk about the key sectors that are in focus. Today's meeting, which included close to about 50 to 70 CEOs, has been quite an effort. What is the plan of action? What happens after this? This has been the first milestone where you're discussing. Where does it go from here? And does this also kind of support and stand as a background to the India-EU FTA that we've been kind of looking forward to?
Well, this has been an excellent forum to exchange ideas and views and share perspectives for businesses to understand opportunities. And given that there is already an inclination, a positive sentiment, good relationships, I think this is going to encourage businesses to explore and strengthen the relationship. So it will certainly provide some impetus to growing economic cooperation.
Meanwhile, the Finance Minister, Nirmala Sitharaman, has made a strong pitch before U.S. businesses, urging them to come and invest in India. Addressing a luncheon meeting of the U.S.-India Strategic and Partnership Forum, the Finance Minister pushed the path-breaking reforms in India, including digitization and transparency, which have eased doing business in India. Sitharaman also met U.S. Treasury Secretary Janet Yellen, IMF's Geeta Gopinath, and also the Saudi Finance Minister Mohammed Ali Dan, also for discussions on the global economy, debt crisis and various other challenges.
In terms of the roundtable with the investors which was arranged today, there was a lot of interest in the India growth story and the focus on reforms, the focus on infrastructure spending as well as other steps which the government has taken to bring about sustained, resilient and inclusive growth, especially in the period of Amrit Kal, is something that was deeply appreciated by all those present.
We're committed to working with her ministry, with the minister herself, and developing sustainable finance, in building up our workforce in India. We already employ more people in India than in any other country in the world. We have issues, of course, and one of the nice things about this seminar was the willingness of the minister to listen to foreign investors in India, to take away their problems, to address them seriously in a spirit of partnership.
The future of India and policies to drive a healthy Indian economy. One of the things that we were focusing on today is the innovation ecosystem, and I was pleased to hear remarks that India is focusing on an ecosystem that will foster companies to come and to bring their innovations.
Meanwhile, back home, we've seen that the earnings season has kick-started. Tata Consultancy Services has kicked off the earnings season with a 5% quarterly increase in the net profit. The tech major also posted a net profit figure of nearly 114 billion rupees, while its revenue was up 2% at 591 billion rupees as well. The full year results comprise a 10% rise in the net profit to 422 billion rupees and a 17% rise in revenue to 2.25 trillion rupees as well. TCS has also announced a final dividend of 24 rupees per share. It is also announced that it bagged fresh deals worth $10 billion in the January to March quarter versus $7.8 billion that was received in the last quarter. Now, there's also some good news on the attrition front as well as with the rate falling by more than 100 basis points on this quarter. The company also reported 821 employees to its roles versus more than 2,100 reduction in the October to December quarter. TCS management has also said that the January to March quarter ended on a strong note.
So overall, from a market segment perspective, along expected lines, except the near-term weakness that we have seen in North America. The North America story also translates into BFSI. BFSI has had a strong run, and we are watching carefully the developments. But overall, immediate impact is less, but of course the near term needs watching. So from an outlook perspective, an environment where the demand for technology-led transformation, the demand for both optimization as well as transformation agendas from our clients continues to be very strong, but it's something that requires very nuanced approach by us.
Meanwhile, the party of bulls continued on the Dalal Street as domestic equity exchanges also settled with gains for the straight 8th session today. In fact, when we also saw the headline fears settled with gains amid positive global and domestic cues as the earnings season for the quarter kicked off. Now, traders keenly awaited the key inflation data from the US and in India as well, which would signal now the US Fed's rate hike path going forward from here. BSE's 30-share pack Sensex rose 235 points to settle the day at 60,393. While NSE's Nifty 50 gained 90 points. The top Nifty 50 gainers included the names such as Divis Laboratories, Bajaj Auto, Adani Enterprises, Eicher Motors and also Dr. Reddy's. And on the flip side, we had Power Grid, NTPC, Nestle, Ultratech Cement and HUL dragging the street sentiments. Now, Apple has powered India's smartphone exports across the $10 billion mark for the very first time in this financial year. According to reports, Apple exported more than $5 billion worth of iPhones in 2022-2023, making up more than half of India's overall smartphone exports as well. Now, Samsung exported handsets worth $3.5 to $4 billion. The other manufacturers also contributed less than 10% of the export kitty. The government is now targeting raising the exports to more than $12 billion this year. Well, it's great news for consumers and then for policymakers as well, as the retail inflation in the month of March has fallen to a 15-month low of 5.66% in March. In fact, this is significantly lower than the 6.44% that was seen clocking in the month of February. The big reason for this decline, however, is the big fall in food price inflation, which has now dropped to 4.8% from nearly 6% last month. While the prices of cereals, milk products and also food and fruits and spices, they have risen considerably. The impact was offset in part by the decrease in prices of meat and fish, oils and fats and also vegetables. Now, March is the first month this year when we have seen the retail inflation really falling below the RBI's tolerance limit of 6%. I earlier spoke to Rajni Sinha, Chief Economist at CareEdge, about the latest inflation figures and what could be their impact and how would the RBI really be reading these numbers as well. Here's an excerpt. It's definitely a dip from 6.44% of February. Were you also penciling in a similar number?
Yes, Sakshi, our expectation was 5.7% only, and this is mainly because of base effect. There is a very high base effect of last year playing on this number, so we were expecting it to slip below 6% this month.
Okay. Also, wanted to understand from you, just like how you pointed out on the large high base, that has caused this kind of a fall. We do remember that in March last year, there was the Ukraine-Russia war taking place and inflation had suddenly shot up to 6.95%. But on a month-on-month basis also, we've seen a dip right here. The last month we actually saw milk prices were a shocker. We are waiting to see some more detailed print for this number as well. But is that going to be a worry point right now?
So I haven't looked at what has happened on the month-on-month basis, but overall our expectation is that going forward we are likely to see inflation moderating from here, and one strong factor would be the base effect. But if you ask me, apart from the base effect, what are the factors that would be playing on inflation? One would be that we do expect food inflation to also come down from these high levels. The very high number that we had seen in the previous 2 months of 6.5 and 6.4%, which was higher than market expectations, that was because of a spike in food inflation, specifically cereal inflation.
I wanted to understand just on the headline figure, 5.7%. Now, this would be somewhere around a 15-month low, and it's come back below the 6% mark of the RBI's comfort band about after 2 or 3 months, I believe, if I'm not wrong. What does this signal? We've already seen that the RBI has kept a status quo as far as the rates are concerned. Would this 5.7% headline inflation give an additional conviction to the RBI in the way they decided on the rates, and we could perhaps expect a prolonged pause?
So RBI had factored this. There was expectation that inflation would go down because of the base effect, and that's also a strong reason why they decided to go for a pause. In fact, what our expectation is that going forward, we are expecting inflation to moderate in the months to come. Overall, our projection for CPI inflation average for FY24 is 5.1%, which is little lower than RBI's projection of 5.2%. In that situation, if inflation continues to moderate and move towards 5% level, we can expect RBI to remain on hold. So we do not think that there would be a necessity for RBI to come again and hike.
The RBI has moved ahead and decided to pause the rate hike cycle. But do these numbers give you any kind of an indication that perhaps we could also look at a rate reversal cycle, rate cuts happening sooner than expected?
So in a situation where we are having recording decent growth and inflation is still higher than RBI's target, I don't see a reason for RBI to cut rates also, unless the situation really deteriorates going forward.
Well, Mercedes-Benz has now posted its highest ever quarterly sales ever this year in January to March. Interestingly, the growth in sales has been driven by its top-end vehicles priced above 1 crore rupees. The company has tried to strengthening this uber luxury segment with the launch of its most powerful model yet, the AMG GT63 SE Performance. BTTV's Chetan Bhutani caught up with Santosh Iyer, MD and CEO of Mercedes-Benz India, and spoke about the new launch and the sales outlook.
Give us a fine detail as to what Mercedes has done when it comes to fine-tuning the vehicle for Indian roads.
Well, firstly, starting from the E-Class, if you see, we have been able to have a long wheelbase E-Class because we have customers who drive themselves on weekends, but on weekdays they have drivers for parking and others. So we said that for India, the long wheelbase is a great solution. So E-Class, the GLE, for example, comes on a longer wheelbase platform. So that's one customization. The second thing for India is also the entire thing about connected cars. So we were the first to introduce connected cars with embedded SIM. The app provides a lot of usage, and daily usages. For example, you can have you can ring fence the way the car goes in. So if your kid is getting dropped to school, if it goes beyond the perimeter, you get an alert to pre-climate control. It's such hot weather, you want to get the car ready before you get in. So these are a couple of topics there. The third pillar is localization. So we were the first again to localize an electric car in India with the EQS, and we have been continuously investing on localizing also cars for India.
Right. Also, thirdly, I'd like to ask you, when it comes to the pricing for this vehicle, what 3.3 crores, it's a bit premium, of course, what the customer gets. Tell us the deciding factor of the pricing as far as this vehicle goes.
So frankly, this is a CBU, so the taxes are for sure high, and therefore that reflects in the pricing. But for us, it's beyond price, because we are also offering, for example, every customer who books now in this quarter will get a delivery from Lewis Hamilton. Now this is something money can't buy experience. And so we are focusing more on some of those aspects.
The growth for 2023, how are you witnessing that, and the demand, especially you mentioned the top end is in the real game changer for Mercedes right now. How's the demand otherwise for the whole year looking like?
No, I think with quarter one, we had 17% growth in this first quarter, so we still maintain our double-digit growth projections for the year, and if that happens, this should be another best ever year for us. So the team is working on it. On the other side, we have headwinds. We have headwinds with Forex because the rupee not being as strong. We had to take the second price increase in April. For that, we have got some financial products now for which the customer can really, because of the high residual values, buy the car at a much lower EMI. So we are trying to come up with some solutions. But on the other hand, we also see geopolitical situations changing. Maybe there is some headwinds there. But when I look at the order bank position, as of 1st of April, we have more than 4,000 customers waiting for our cars. Many of our cars are, the top-end vehicles are waiting for 6 to 16 months. So that gives us confidence that the growth momentum should continue.
Nearly 100% growth year on year we are witnessing for electric vehicles. Mercedes has been one of the pioneers in bringing electric vehicles into India's super performing cars. So give us an outlook on the Mercedes that they are probably you're planning to launch in the coming times.
I think for us, electric is not an option, right? We are fully committed to a sustainable luxury, and there is no luxury without sustainability. So we will be accelerating this. Today, the demand is high. Again, as I said, the waiting period for an EQB, for example, is close to 5 to 6 months. Also, when we launched EQB and the GLB, one was a combustion engine and one was an EV. We saw the take rate for EV to be much higher. So today the take rate is 70% for an EV and 30% for a combustion engine. This clearly shows consumers want to try out EVs. Before launching new cars, as I said, we want to ensure there are sufficient supplies. No point in exciting the market if we are not able to deliver the cars. So our focus is how do we get allocations for India, what can be done, and we are discussing this with our global headquarters. EVs are in demand. Our global press release will come out in a couple of days. You will see even globally, Mercedes-Benz EVs are really hot cakes, and therefore to get some cars is a challenge.
And with that, we've come to the end of this edition, but do stay tuned on to India Today to catch up on all the world of news in the general world as well. Until then, many thanks for tuning in, and good night.